This is by far my favorite trading setup, and I'm about to show you exactly why. This was my best trade of the month, and this is a perfect example of repeatable behavior that shows up over and over again. Gold gave so many good trades this month, and I guarantee the same exact behavior is going to happen next month, the month after that. Welcome to Pips to Profit. My name is Cameron, and we're doing a full chart breakdown for the month of November, going over all of the different signal days, 3-day setups, and the 3-day cycles, looking at things in hindsight to help us better prepare for the future. I plan to start doing this style of review every 4th week of the month, so let me know down in the comments below if you enjoy this format or if there's any improvements that you would like to see made. Also, give me suggestions for pairs that you would like to see in the review, and the top 3 suggestions will make it into the video. But let's go into the different types of details that we'll be looking at during this review. We're going to be looking for signal days. Now, a signal day is basically a price action pattern on a daily chart or some kind of repetitive cycle that the market continuously goes through, and then us day trading down on a lower time frame can benefit from that behavior depending on how the current day is set up. But the day prior is the signal day. We can look at that in hindsight, which is why hindsight trading, in my opinion, is so important because it helps you to study for the future. Different types of signal days include first red and first green day, inside days, 3 days of breakouts, and outside days could also be one of the signal days. We're also looking at the 3-day cycle. Day 2 and day 3 trades, which can include the 3-day rectangle. Stacey Burke calls these the day 0. You might have heard me call it like the heartbeat pattern just for like a visual reference. It's the same exact thing. Trend trades, reversal trades. And then the weekly template trades, the Monday through Wednesday, the Wednesday through Friday. It's pretty much the exact same templates, just over different days. That's going to be your 3-day rectangle and your trend and reversal trades as well, coming off of the high of the week, the low of the week for good reversal trades, or trend trades, breakout pullback style of opportunities. Now, I've got a few of those different things listed here, just for a good visual reference going into the actual review. So that way there's not too much confusion about when I start labeling things off. So I'm going to be using a few different abbreviations. 3DC stands for 3-day cycle. So whenever I reference day 1 of 3DC, that's going to be of the 3-day cycle. When I put day 3/day 1, that means that it was day 3, but at the close of the day, it reverts back to day 1. BOD1, that's breakout day 1. We were going down. We've got a breakout back up to the upside. That's the first day of breakouts in the opposite direction. Inside day, first green day. Those are me labeling off different types of signal days. LOD stands for low of day. Obviously, trend. Okay. Now, those signal days were those are very broad things that we're looking for. The beginning of what a setup could be are the signal days. If I had a flow chart, it would start with signal, and then it would develop into maybe like characteristics or the things that build the setup, and then, flow over one more time, and then you actually have the setup being formed. So over here, I've got some of those details listed. We just looked at the different types of signal days on the previous slide. These are the broad topic things. Now, these are going to be the things that are a little bit more narrow on the day itself. How is the day setting up? What are the details going into this setup so that I can actually find reoccurring behavior and actually get in at the point that the market is about to explode, either going vertically up or vertically down. So I'm going to be looking at things like market structure, higher highs, higher lows, higher high, lower low, lower low, higher high, things like that to find long squeeze patterns, short squeeze patterns. Long squeeze would be like higher high, higher low, higher high, lower low. That would be a good long squeeze pattern. A short squeeze would be like lower low, lower high, lower low, higher high, higher low. That higher low, short squeeze, people get squeezed out of their shorts trying to short back into the low, and then it goes vertical to the upside. I'm also looking for 3 different kind of 3 push patterns. This is a 3 push pattern. This is a stair-stepping pattern. Push 1, push 2, push 3. That's a stair-stepping motion. Ending in a 1, 2, 3, 1, 2, pause 3. Looking for peak formations, head and shoulders, inverse head and shoulders, ascending, descending triangles, double tops and double bottoms, triple tops, half Batmans, and A tops and V bottoms. This is a peak formation high up here, a bit of a triple top, or maybe depending on how you look at it. But this is a peak formation high that has broken down, a little descending triangle to go lower. There's lots of different chart patterns that you can look at, but I'm not looking at every single one of them. I'm just looking at the extremes for these chart patterns. I'm not looking for these all over the place. You can see I kind of got some things marked off down here. This is at the low of the day, but I'm only looking for chart patterns at the extremes or coming off of the extreme. So this is at the high of the day. If it breaks down and then I get a chart pattern just under that to continue to go down towards the low of the day, that is acceptable as well, but I'm not looking for chart patterns all over the place within the day's range. Okay, and finally, these are the pairs that we're going to be going over, at least for this first week. Like I said, once I get more suggestions down in the comments, I will add 3 more pairs. We're going to be going over NQ, the NASDAQ, YM, Dow Jones, GC, gold, and CL, oil. All right, so what I'm going to be doing is going over all of the details for these different pairs, NASDAQ, and the other pairs that we'll be looking for or looking at weeks 1, 2, and 3. And then that way we can go back, review all of the details from this past month, and find the reoccurring setups that show up over and over again, and finding those pairs with the correct conditions that provide good quality setups. So looking at how this week has played out, I'm going to go through and I'm going to list off the different types of signal days, the different types of closes, and then tell you based off of that day's close what I would have been looking for on the next day. So that way you can see like, hey, these are the details based off these different types of closes, because these are very common. This type of week and every type of week is very common. It's either a trending week, a ranging week, or a reversal week where they could have like a pump up and then a dump towards the end of the week. This was obviously a trending week. The details are going to repeat over and over again, and then sometimes those details will lead to a trend, and sometimes those details will lead to a reversal. And it's really important to pay attention to things like structure, the time of day, the time within your session, those new 15-minute bars, those new hour openings, identifying where traders are trapped at the extremes so that if it does reverse, or if it looks like it's going to reverse, but in reality that maybe they're just like putting in a higher low to continue a trend, or like a lower low, a lower high, and the lower high you think they're going to reverse, but it's actually just putting in a lower high. Like, it's really important to pay attention to those types of things to keep you from entering into low quality opportunities. So on this Tuesday over here, we've got Monday opening range and an inside day. They broke out to the upside over here, which may have put stops back at the other end of the week back over here. So maybe they're going to reverse over here on Wednesday. But the most important thing is Monday, Tuesday was a breakout day. So on day 3, Wednesday, I would look for the Asia makes a higher high, London pulls back, New York is the trade. It looks like that Asia was the trade, and maybe even going into the London session, they've gone vertical and broke out of previous day's high. So now the template is evolving and continuing to change in a direction that no longer really is high probability 90-10 opportunity that, hey, I should be looking for a long. Now I can shift gears into, I've got 1 peak, 2 peaks, and maybe 3 peaks. New York session opens up over here, 9:15, 9:30. Now, so I'm shifting gears into, I've got 3 sessions of breakout, and I'm looking for a lower low on the inside to go back in the other direction. But the market just keeps making higher highs and higher lows. So now I can invalidate this and say, hey, this was not my best trading candidate for this pair or for this day. And I could do that very objectively by watching structure and knowing what I am looking for based off of the evolution of the template and the evolution of the day. Breakout day 2. So now we're at the end of Wednesday and we're broken out of previous day's high again. And again, is the market going to break out and continue to trend, or is it going to break out and reverse? So now it's day 2 of the week, Thursday, or essentially Wednesday goes back to day 1, day 2, and then day 3, Stacey Burke. On this day 2, is it going to continue to expand, or is it going to break out, pull back, or break out and reverse? So it looks like this right here was the London session. London made a higher high and pulled back. And then New York session in the gap time started the beginning of the trend and then broke out and went vertical at 9:30. Now, is this a trade setup that I am actually willing to take regardless of the fact that it continued to go higher from this point? Me personally, no, this is not a trade that I am willing to take. This reversal, I would have been willing to take if it did the appropriate things. This continuing to make higher highs and higher lows at the high of the current week is not something that I tend to go after. I usually will wait for a template to continue to develop, like get a first red day, look for the revert, something along those lines. Whereas right now, all I have is just a second breakout day. I don't have much to go on. And I'm kind of, to me, it feels like I'm guessing direction. So on breakout day 3, now I do have a signal day. And you guessed it, 3 days of breakouts. What am I going to be looking for over here on this day? I'm going to be watching for structure of the market to see, hey, do I have a lower low back down on the inside? So this over here was making higher highs and higher lows. This is all on the inside of a 1-bar range. So it does not count as a swing low being put in place. And then it continues to go higher. So we don't have a lower low over here. All it's done is just pulled back very aggressively. My low is still all the way down here. So we're just in an up moving market, and then you get consolidation throughout the day. So this is really a no-go day for me as well. And it's looking like most of this week was no bueno, no good for trading. So let's go to the next week for NASDAQ. We'll go to week 2. Coming into the next week, I love this template because it really just shows the evolution of how things coming off of the last week can develop into the current week. We've came off of 3 days of breakouts from last week. And, you know, sometimes it can just keep going. And that happens fairly frequently where you get these 5, 6, 7 days of breakouts kind of going into an extended run, probably a higher time frame range expansion of some kind. But in this case, we don't get that. Instead, we get a peak formation high being made above Friday's high, and they pulled back on the inside of the range and closed. And then on Tuesday, you get peak formation low and also a lower low, which is a part of the tips and tricks slide that I keep going over every single week in my live streams here on YouTube. And I've also put in weekly template videos in the past as well. Peak formation high and peak formation low. Also, this Monday was a first red day. So there might be a trade over here that we can look at. I'll go back and take a look and see how this was built. Let's look at the rest of the week real quick. So you get a peak formation high, peak formation low, and a day that consolidates in the middle. Basically, not an inside day, but it's a narrow range. Notice how this opened here and then closed here. They closed pretty much exactly where they opened. So an narrow range day still holding on the inside of this peak formation high, peak formation low. And then on this day over here, there still is not much of a trade. Now, you might get a little chopped up on these 2 days here, or you could just wait for the template to really start to play out. If I was going to take this trade here on this day, normally what you would look for is some kind of from down low to up high sort of candle, like a breakout candle. They break down. I've heard Stacey call these like death candles and things like that, where they leave all of the volume trapped up high or down low. So that would be an ideal place to be looking to get in, or for a template like this to play out appropriately, or just looking for squeeze patterns as well. So on the day itself, if we made a higher high and then pull back to make a higher low, I could take that and say, hey, this is a squeeze, and then I would take that trade on a lower time frame. And sometimes it'll explode extremely strongly, sometimes it won't. But let's just talk about the continuation or the development of the template, where we get the 3-day rectangle. This is really the beginning over here. So this kind of turns into a 4-day rectangle. And then we break down and we get, again, breakout day 1 to the downside, which is also an opening range breakout. This is the opening range. We broke out. Is the breakout going to succeed, or is it going to fail? So then I would say on this day over here, hey, are we making higher highs and higher lows, or lower lows and lower highs? Because we just had a breakout to the downside, and I want to be looking for a trend opportunity if it presents. So lower lows and lower highs. We have a low and a pullback and a low 1-bar range. They don't ever go above that bar, so I don't count this. And then they do pull back far enough over here, and in this pullback, and if you look at the time of day, run 1, consolidation, big bar to the high. Run 2, consolidation, big bar to the high. Run 3, peak formation high, up, down, up, and then they engulf this bar back down. So that gives us our 3 push pattern and an engulfment for a trap volume sort of scenario. If I bought this bar here, or if I bought any of these other 2 bars, so kind of a 3 push pattern at the high as well, I might be trapped up here trying to trade back up into the high, and they shouldn't come back. And notice once they drop down, they pin up there. That's fine, but they never actually let those people out of their positions. And then timing wise, we get 9 o'clock, new hour opens, and it starts to go vertical 9:15, 9:30. And continues to run. And this is one of those range expansion opportunities where you can grab previous day's high and previous day's low, drag that thing across, and you can get a measurement that way. Another way that I like to get my measurements is grabbing the low of the day prior to the session. And if in this case, like the breakout level, the previous day's low So from low of day to breakout level, and that will also give you really good and accurate representation of targets within your session. So lower lows, lower highs, 3 push pattern back up into the high. This is another repeatable setup. Breakout day one, breakout day one, breakout day one. Is the breakout going to succeed or is it going to fail? Wednesday, Thursday, Friday, Wednesday, we're still in a 3-day rectangle. We're still consolidated on the inside of the opening range. Wednesday could have been a breakout day. You know, the template is evolved, but it wasn't. It was consolidated. All right, we're still in the opening range. Breakout day one is the signal. Breakout day one is the signal, okay? And then it tells us what to look for on this day over here. All right, it's all part of the 3-day rectangle, but breakout day one is the signal. Coming into week 3 of the NASDAQ, which I think was actually one of my favorite weeks for this month. Friday closed in breakout coming into Monday, which is our opening range for the week. And it was also a first green day on that Monday because we had a very large dumping day on Friday. We had a day that opened, attempted to go back down, but then failed and closed above its open for that day, which means that they made their lows in the morning and they made their highs in the afternoon, which means that on the next day, I'm going to be looking for a low of day, possible first green day trade coming off of hopefully, or maybe, the low of the week. So now we've come down once, we've come down twice, and we've come down a third time, which in reality, if you didn't even see that, it wouldn't matter, all right? Because we're at the previous day's low, and that is going to be, or should be, our main focus the day and for the week anyways. Excuse me, for the day, not for the week. So let's zoom in on this, and we'll go down to the 5-minute chart, and we'll see kind of like what would the entry have looked like on this first red day. So coming back down to the low of the day and the low of the previous day as well. Just want you to kind of notice how they come down to this in this accelerated 1, 2, 3, biggest bar on the chart reversed immediately. All right, so 905 engulfment. This is a peak formation low, kind of a V bottom. Down, up, down. This is a middle structure for that W. So if I were to put this like down and then up and then down, extended W back up, there's the engulfment of that W. Engulfment, pin hammer. And then now if I have missed this, which I am terrible at trading V-bottom reversals, and also I trade only after 9:30, now this is going to give us the opportunity to get in on the first pullback, which is my second best option. So you get the pullback, 1 bar down, 2 bars down, 3 bars down, down, up, down, and then engulfment of this previous bar. That's your W again, down, up, middle structure W, down, up, and then that should be your entry or the one tick above this bar entry. First green day back to high of days, my first target, and then previous day's high. Now, I didn't take this one, I don't think, but I did take not this one either. I took the trade on the following day, which we'll talk about here in a second. But either way, here's your first red day opportunity. Your high of day, breakout day one. So we're making higher highs and higher lows as the day begins, and then they make a lower low and pump it back up into the high of the day. So after this lower low, this is what my indication to start looking for the setup is. Lower low, push 1, peak 1, push 2, peak 2, push 3, peak 3, down or up, down, trades back into the high, up, and then the engulfment of that, basically a double top or an M, and then it breaks down and goes into parabolic channel, which is one of my favorite patterns to trade. I like to see them come out the bottom first and then try to go back to the top and then eventually break out, pull back, and continue, which is exactly what happened here. Notice this little sandwich bar in between, down bar, inside bar. I very, very frequently will put sell stops below this bar here as it follows through, catching me and grabbing me or taking me into the market, or I just let this bar here close as a breakout bar. I want to see it break out. It does not need, I don't want to see it pin. When I get these little breakout, fake out, sandwich in between bars, I want to see this next bar close strongly down at its lows, letting me know that's going to be a good entry. And that's one of my favorite entries to take. All right, coming over to the next day, which is the final good trading day of the week. Notice how on Wednesday we did get the first red day. So again, continuing to evolve the template. We just came off of a breakout day one. Again, breakout day one. Will it succeed or will it fail? What details do I need to look for? We're at the high of the day. We're at the high of the current week. They've made a lower low back down on the inside of this week's range. I'm going to look for a pump back up and then a dump. What details do I need to know and understand for that pump up? Push 1, push 2, push 3, 3 pushes. Where is the volume trapped? I always look for above push 2 for volume to be trapped, because that's where most human beings are going to start taking action in the chart and believing that it's going to continue in a direction. So above these two really big solid candles is a good place for me to say, hey, this is probably where they're trapping at the high, because somebody bought this bar and somebody bought this bar. So once they drop it back down and start putting the other side of the market into profit, the shorts, then I can start looking for my trade more confidently. They keep dragging the market lower, popping back up, but not going anywhere, and pulling people lower and lower. My trade setup is playing out, and then it collapses. Okay. I know it sounds like a lot. It sounds very like, oh my gosh, that's a lot of stuff. But once you see it over and over and you look for the same things over and over and over, it's no different than learning how to ride a bike, and you can pick it back up and just grab the bike and start riding whenever you want. So on this day, now we have a first red day, the opposite of a first green day. I wanted a buy low opportunity after first green. So now I'm going to want a sell high opportunity after first red. So we've come off the low of the day. We've broken out of consolidation. Go back and watch my 3 pushes videos about how markets move coming out of consolidation. I like to see, or one of the things that you can see or observe or look for, is how do they go from point A back to point B, which is the previous day's high. What behavior did they go through to get there? What behavior did the market go through to get there? So a breakout, and then you get the peak 1, peak 2, and peak 3 back up to the high, ending in this little 1, 2, 3, up, down, up. Engulfment, I like to see volume trapped above push 2. Holy cow, people are really caught up there. Push 2, we got some big solid bars into the high and a breakout. I bought this bar, I bought this bar, I bought this bar. Not me, the other side of the market. If I bought any of these bars, that one bar, I am now caught. And then you get the breakdown, the pullback. This is the trade that I did actually take. Back down towards the low of the day. Great trade, over and done with relatively quickly. I think I got out in this bar on that first initial drive down. And again, engulfment, right side of the M, sell stops 1 tick below, or however you want to do it. Personally, I think I did 1 tick below that bar. Really great trade. Anyways, going into Friday, let's go back and look at how this week has developed. So we've got opening range Monday, then we have Tuesday breakout day 1, first red day on a Wednesday, and then now we have essentially reversed off the high of the week again on Thursday. But what is this telling me? It's not expanding, it's not going anywhere. We just keep on poking our heads up and going back down. So at this point, the only thing that has happened throughout this week is mainly or mostly a consolidation. Peak low at the low of the week, peak high at the high of the week, and then all that culminates in Friday. You're sitting here looking for a Friday trade, but the trade was actually over here on Thursday, and also over here on Wednesday, and also here on Tuesday. All of this is on the inside. It's all on the inside of Thursday's high and low. It's on the inside of Wednesday's high and low. It's on the inside of everything. So this is chop zone, which it ended up, in hindsight now we can see, did turn into a very choppy day. As I sit here and record this on Wednesday after the New York session has ended, this is week 4. We don't have the entire week to actually look at. I did just take a trade today on gold, and I can go over that. But if this video gets, I don't know, 1 like, I'll do a week 4 review in the near future. Moving over to US 30 or YM futures contract, we're going to take a look and kind of compare and contrast what happened with the NASDAQ. And over here, starting on Monday, we started with a narrow range, day 1 of the 3-day cycle. They poked down into the low and reverse back up into the current day's range, which resets the cycle and gives us opening range for that week. And then on Tuesday, we get, again, breakout day 1 and a very strong pull throughout the day, 3 sessions. Now, breakout day 1, Monday, Tuesday, that template, opening range breakout. I would be looking for Asia makes a higher high, London pulls back, New York is the trade for the dump and the pump. Except that did not happen. And similar to the NASDAQ, it just pulled all day long, so the template continued to evolve, and I would need to mentally shift gears into, let's look for a lower low to go back to previous day's high. But this is a very strong breakout, and there was no lower low, so I had no opportunity to get in, because I'm not going to guess a direction or guess that it's going to go back down or anything like that. There's really no indication whatsoever that this is going to turn into a reversal. So let's get up here And you can just take a look and see that this broke down. They made an engulfment bar, if you will, but it's just a pullback. There's no lower low. The low is all the way down here. So this wasn't even a 2-bar pullback, so they continue to go higher. Now we do have a 2-bar pullback. So this is my new higher high right here. This is my higher high that was broken. 2-candle pullback. This is my higher high. My low is all the way down here, so definitely no lower low. And in fact, they actually broke and they continue to go higher in the afternoon over here. So no reason at all for me to be looking for a short opportunity other than there's 3 sessions of breakout, but there was no indication on the day itself for me to get in. Now, a very important and interesting part of this weekly template is this Wednesday, Thursday, Friday. Strong breakout to the upside. And then a Thursday that you get a first red day, a day that opened over here and then basically closed at its open. So a very narrow range day. They attempted to go higher. They made their highs in the morning and lows kind of in the afternoon, but more of just a narrow range. But it is a first red day. And this is very important to me because it can be very confusing as far as, hey, this is a first red day. I'm going to look for a short opportunity. But in a strong breakout to the upside, there's a good potential that this is just a part of a pullback to continue to go higher. So how do I actually look for that trade somewhat objectively, or as objectively as I can? On this day over here, the most important thing to me for these first red days that I believe could possibly be a trap is to be watching the closing price. And of course, the consolidations at the beginning of the day to see kind of how that day's template has developed. So on the day itself, they traded back down into the low, put in a peak formation. This is the end of London in the gap time, and they break out and they start making higher highs coming into the beginning of New York. This is 930's open in a parabolic channel to go vertical, back up through the high of the week, and even complete a range expansion. So let me show you exactly why this template. I just want you to look at this. Look at the narrow range day, how it barely closed underneath the previous day's high. It is technically a first red day. And then more importantly, how this day developed with the consolidation and then the ascension over here. Same exact thing. Barely closing under the high, trades back into the low and begins to ascend, consolidation, and then the run to go higher. Same thing over here. Barely closes under the high, previous day's high. And then you have your end of day consolidation. They trade back into the low, break back up, closing price, run back up for the high, 2-day consolidation to continue the expansion higher. Same thing here, closing price, they break back above closing price and engulf. There's the trade. That's the first red day trap that I look for coming off of closing price. And this is another beautiful template because on day 1, the opening range, day 2, all right? So this is day 1, day 2 because they broke out of Friday's high and it failed the next day. Day 1, day 2, breakout day 1 to the downside, breakout day 1. Now, on the next day, I could be looking for either them to be working the low of the week, or they could, pump it back up and then we get a reversal trade back down. So let's take a look. We're making lower lows and lower highs, 3 sessions outside of a breakout on day 3, and a peak formation made at the low of the day in the London session. So let's go down to a lower time frame and see if this would have been an actual trading opportunity or if this is just a hindsight opportunity that I would not have been able to take. So we've got lower lows and lower highs. Lower low, they pulled back in more than 2 bars objectively and then made another lower low and pulled back. So objectively, this is my low. In fact, they actually pinned down a little bit further so I can use that because that's the furthest that they've gone down or whatever. And then what has happened is they've came back up and actually made a higher high. Okay, they broke out. We got our higher high. Okay, we got a break. And then once we get the higher high, that begins the 3 push pattern back down into the low. Push 1 and a pause, push 2 and a pause, push 3, peak formation low, pops back up. I think there was probably news at 8:30, which makes this untradeable. But this would be the idea. Higher high, higher low, first pullback. Looking for, again, I reiterate, ascending triangles, descending triangles, double tops, double bottoms, triple tops, triple bottoms, rectangles, all of those different types of things to either get in at the high or the low of the day or on the first pullback. In this case, you get an ascending triangle. Then we get the news. The news was explosive in the upwards direction. So maybe it's going to give a dump and pump opportunity. Would I have personally taken this trade? Absolutely not. The pullback to the previous days, what is that, low? Sure, fine. It went up from there, but would I have personally taken this? Probably not. However, objectively looking at it, higher high, 3 pushes back down once, twice, 3 times into the low, and a drag to go back up. What time is this? So third hour, back towards the high. Not really a trade that I would be willing to take. I think that the first pullback, if the news wasn't on the calendar and this was 9:30, would have been perfect. Now, let's take a look and see the rest of the week, because what just happened is, sure, the market went up from there, but have I missed anything? Probably not, because the template continues to evolve. So now we have a first green day. Day 1 has reset. Day 2 has broken out to the downside. Let's go back to the playbook real quick. First red day traps. We can find the first green day traps, and that is going to give you exactly the same exact template that we were looking at right here. You get a first green day and then a day that breaks back down and closes at its lows, looking for lower lows and lower highs on the next day for me to look for a trending opportunity. Lower lows and lower highs and a pullback on the day to look to take the short. Push 1, peak 1, push 2, peak 2, push 3, peak 3, time 9:30, and it breaks down and goes vertical. All right, so perfect trade opportunity here on this Friday as well, based off of a template and based off of actual trading setups and not just guessing direction or guessing movement. Last but not least, looking at YM on the third week of the month. Opening range for the week on Monday, then Tuesday, failed breakout at the low of the current week, restarting the 3-day cycle, day 1 3-day cycle. This was also the 5th day of shorts triggered into the market coming off of last week. 1, 2, 3, 4, actually it was 6 days triggered in. So basically, maybe we're very overextended. That could be the thought or the thinking. If I was to receive a first green day, that might be more higher probability of success because of the overextension of the market, especially if it starts breaking back out to the upside. That's always the thoughts. Overextension, get a first green day. How do I gauge what an overextension is? 5, 6, 7 days of breakouts in a direction. It's a little overextended, all right? So then we get a first green day. They made their lows. And then they came back up and made their highs in the afternoon, closing at the high. First green day, also an inside day. This next day over here, probably would not have been willing to trade this. What is this, 5 o'clock? Because there's no solid, good, higher highs, higher lows on the day until it starts breaking out back up to the upside. Then we get a higher high and a pullback. I can almost guarantee you this would have got me right here. Trying to trade this on the V-bottom reversal, which is why I really don't like V-bottoms because of this. And it ended up turning into more of a W formation instead. So let's go down to the 5-minute chart here. That's why I really love waiting for the W and not waiting for, or I don't trade the V-bottoms at A-top reversals because they're just not consistent enough for me. Big down candle down. And then we get kind of the W formation here. It's really not that pretty at all. In fact, I definitely would not have traded this. I would have not looked at this and said, hey, this is high probability of success and got in on it. So that's fine. Whether or not you're able to trade that, the template still remains the same, which is perfect. Let's go to the next day and see if this would have turned or evolved into something better. Breakout day 1 to the upside now. After first green day, we get a first green day, then we get a breakout day 1. Again, is the only things I'm thinking about are, hey, is this breakout going to succeed or is it going to fail? And if it is a trend trade, I should be trying to get in at the low of the day or as close to the low of the day as possible. So we get down here, kind of a push 1, push 2, push 3. That's very subjective, but depending on how you look at it. Then we get the consolidation at the low of the day. This is where things start to actually become extremely important because we get the consolidation at the low of the day. I'm looking for double bottoms, triple bottoms, ascending triangles, descending triangles, whatever types of peak formations to give me the reference for that peak formation at the low of the day, peak formation at the low of the day. Now I can wait for the first pullback to get in if that presents. This is a 5-minute chart. We pulled back. We go into consolidation. New York Open, 9:30. Beautiful. Engulfment. There's kind of a pen bar back up to the high, and then 9:30 opens on a outside engulfment bar closing at its highs. This is beautiful. What time is this? Wow. Okay, 9:30. So maybe one tick above this bar or whatever for the expansion of that range, however you want to do it. But this is a beautiful template for that Friday. I think Thursday would have been a little choppy, and I probably would have got a little beat up. I would have gotten in a little bit too early here. Still a really good template, though, to watch out for. Week 1 of oil was fairly consolidated, but it's the same rules. Looking for breakouts, looking for signals, and then letting the template continue to evolve and continue to set up until it is an appropriate playbook opportunity that I'm willing to actually take. So opening range on a Monday, and then coming into Tuesday, we're coming off of multiple days of breakouts from last week. We get breakout day 4. Now, this is actually a picture perfect setup coming out of consolidation. Again, 3 pushes. Markets come out of consolidations at times in 3 stair steps, trapping volume at the high. So if my belief is that there's should be traders trapped above push 2, peak 1 outside of previous day's high, pin, draw a line, peak 2 coming out of previous day's high, and then leading into peak 3, and then studying the behavior up high, push 1, push 2, push 3, triple top. And if I go down to a 5-minute chart and look at the behavior on my entry time frame, you'll notice that those peaks are not only more obvious, but also the way that they're pulling back. Massive bear or bull candles into the high. Big bull candles into the high, lifting price, and then immediately pulling back. I mean, these candles are saying that this market's going to all-time highs. These bars are some of the strongest bars on the entire chart, but then they go up a couple ticks and then pull back. That shouldn't be happening. The behavior of the bars is not matching what the chart is actually doing. That turns into a triple top and breaks down. That gives you a lot of information. Now, this trade is not perfectly timed. It's not in the trading window, but for demonstration purposes, it is a new hour, so it is still valid. It's just not in my timing window, so I would have missed this trade. But brand new hour opens up, that lunchtime hour, that noon time frame. Great trade, just not for me. Not in my timing window. So now what we can do is we'll go back to a 15-minute chart, and we're going to go and look at the rest of this week, and then we can go into week 2. So the development of the template continues to evolve, breaks down peak formation high, peak formation low, makes a lower low, all right, and then pumps back up into the high and fails to make a new high. Peak 1, peak 2, and peak 3. Now, I don't know that this is going to be peak 3 over here, and I don't know anything about, so this is Wednesday, Thursday, Friday. All I know is this is at the high of the week. I really don't have enough information to frame a decent trade until right over here on Friday. All right, why is that? Because on Thursday, I get a first green day, and then on Friday, I have a breakout day. We've been dumping back down. First green day, yes, it's at the high of the week, so it's not really a great first green day anyways, but then the next day, so you get first green, then you get a breakout, and then now I can say, wow, that looks a lot like some kind of template that I'm used to seeing, where we get this first green and then a breakout day the following day. So we get first green, then we get breakout day. This didn't break out, but on the other examples for first red, it does. Same exact setup, but a weak close. They've closed very at their lows. And then on the next day, watching closing price and the structure of the day, making lower lows and lower highs in order to make a decision. So now we can go back to this over here and say, hey, did I have a trade in the New York session on Monday based off of this template? And looking at this, I guarantee you with 100% certainty, I would not have taken this trade because the pump up wasn't big enough and it just kept pulling in one direction. So I'd have to kind of just jump in anywhere. And that is something that I really, really try to avoid. So this is the London session was absolutely beautiful. Makes a lower low. London pulls back and New York is supposed to be the trade, except London was the trade as well. You get peak 1, peak 2, peak 3. Ending in a 3 push pattern. Looks almost exactly like the behavior we saw over here at the high, except now it's down over here in Asia. Peaks, 3 pushes. I believe people are trapped above push 2. I'm going to use this bar because it's the most obvious bar that people probably bought. Wow, look at all those people caught in one bar running away. New hour opens up 4 o'clock. And then leaves all those people trapped up top. Really great tool to use. And then seeing these patterns over and over again, of course. Let's go and look at the rest of week 2 for oil. Go back to a 15-minute chart and get all those details up there. Okay, so on Monday, opening range for the week. Very wide range day. That's okay. That's also a breakout day to the downside. So opening range, then we get Tuesday. Tuesday was not a breakout day. This was a day 1 of the 3-day cycle. They broke out and it kind of popped back up here and closed. Was not a first green day, except now we've got 1, 2, and 3 days of shorts into the market. So maybe on the next day I can look for either a continuation pattern or a reversal depending on, structure. So we're making lower lows and lower highs. I would come over here and say, hey, what are we doing? Really not going to be any great trade over here. But now we have peak formation high, peak formation low, Tuesday and Wednesday. So now the template continues to evolve and we can look on the following day. Thursday trades back up into the high of Tuesday in that same exact three peaks pattern that we've seen in week one for oil. We've seen it in the indexes, that same exact pattern. NASDAQ, they break out a consolidation, high of the day, the current high of the day, breaks out peak one, peak two, peak three. We're at the high of the day, push one, push two, push three. Maybe we've got volume trapped at the high, drops it down, pins up, doesn't let these people out of their positions, but maybe keeps them a little hopeful. What time is this? So this is kind of coming into the end of the session. Beautiful reversal trade in the New York session over here. We can go down to a 5-minute chart and look at that as well, but it's going to look exactly like those other ones. And then from this, no first red. This was a great trade. And then this was a breakout day over here. So maybe a trend opportunity, but mainly and mostly just a consolidated week on week two. Week three, Monday, opening range. Tuesday was a breakout day. Asia, did it make a higher high? Yes, it did, except this was in London. And then we pulled back, and before the New York session even opened, so now thinking about timing, we've traded up into the high a second time and a third time, and then coming into 9:30, we get the peak formation high, up, down, up, engulfment. The 15-minute chart peaks, three peaks at the high of the current week for the reversal. Back for the money. Now, on Wednesday, there is a first red day. And after getting first red day, let's mark this off. What do you think I'm looking for on the next day? I'm going to be looking for a sell high opportunity if it presents in my session. Trades back up into the high of the day, real messy. Probably we got a little chopped up over here. But the thing that is the most important about this 3-day template is, yes, this trade didn't work out. Maybe scalped a few pips here or there. But the most important thing is that now I have a first red day and a breakout close to the upside, because now I can say, hey, first red day trap. This is a 3-day template, and I should be looking for a buy low opportunity on this day over here. And perfect, beautiful low of day, peak formation, down, up, down, and then the engulfment to go back up. Let's see what time this was made. 9 o'clock, new hour, 9:15, 9:30, outside bar, engulfment closing at its highs on a 15-minute chart. How pretty is it on a 5-minute chart? Let's take a look and see. 3 push pattern at the low, peak formation was made, ascension, outside bar, engulfment, pin hammer, 9:40 for the big run to go higher. All right, we're going to take a look at gold real quick, all 3 weeks. And the development of gold this month has just been immaculate. And it would be very easy on some of these trades to accept less, if that makes sense. So like for me, I only trade after 9:30. I don't take trades before then, unless a very specific instance takes place and I feel extremely comfortable in doing so. I mainly am waiting until after 9:30. So if you are somebody that trades before then, that's great. Then a lot of these trades, especially in the first and second week, are probably for you from gold. Same templates. It's just the timing is a little weird for me. So Monday, opening range, tips and tricks. On Tuesday, outside day, they hit the low. They hit the high of the previous day's range. And then on Wednesday, looking for a squeeze. Lower low, lower high, higher low. In this case, we get a lower low and a lower high. Lower low and a lower high coming into the New York session. So again, first hour, New York opens, first 15-minute bar engulfs, descending triangle to go back down. Now, 9:30 opens up way down here outside of the previous day's low. So this is kind of one of those things where, is it even worth looking and getting chopped up, trying to catch the continuation, chopped up, trying to catch the reversal? No, it's not worth doing anything because it's no longer a template, and it's now me just trying to trade direction. Realistically, the best trade of the day came off of lower low, lower high. This was my ideal entry up here, and this was at 6:20 in the morning in the gap time, and the next one was in the first hour, so I wasn't able to, or had no opportunity to enter in unless I wanted to break my rules and start doing things that I'm not supposed to. The next day, or Thursday of the week one. Now, this is a very large decline day, and sometimes when we get these, there are playbook opportunities. Now, I did not take this trade over here, but the playbook opportunity is on very large decline days, kind of similar to those trap opportunities. When you get these large declines, look for the consolidations down low and the ascension, trying to catch the strong reversal back up. All right. So whenever you have like these really big drawn down decline days, and then watching these lower consolidations, how the day ends, how the new day starts, and how it's breaking out throughout the day, can tell you a lot about what is actually going to happen in the New York session and if that trade is actually going to play out. So that's what came to mind when I saw this. And this is the end of day sort of consolidation, how the new day starts. And it started off in a rectangle and started breaking out to the upside right into the beginning of New York session. Again, first bar entry to go long, except I don't, number one, I'm not going to take this in the first hour anyways, but when you have a series of bars like this going higher, I am not one to chase. I like getting in after it does something like this and on the dump back down, and as it's about to go back up, that's usually where I want to get in. I don't want to be trying to get in as it's, chasing it higher, because then, it looks really good. You get in and then you become a part of the first mouse, and I just don't like to do that. So anyways, continuing on with the template, you get a first green day, low of week, day 1 of the 3-day cycle. Day 2 of the 3-day cycle on this Friday turns into a first red day. So we get a first green day, and then we get a first red day. Hey, is this going to be a trap for that first green day? Maybe I can look for lower lows and lower highs the next day. And then I come to the screen for New York, and sure enough, they're making lower lows and lower highs, beautiful rectangle patterns breaking down over and over again. And then again, for you first hour traders, this is a really, I think this might have been news, so definitely not before the news, but maybe soon after. Beautiful pattern, beautiful template, beautiful playbook opportunity to go short on this. And then now we're in a breakout close. So we're broken down, we're breakout and looking for pullback. So we get a breakdown, lower low on a Tuesday. We're starting the next week now. And then Tuesday pulls back. So we're making lower lows and lower highs going lower. Opening range for the week is on Monday. Then on Tuesday, we get the lower low and the 3 peaks pattern to go back up into the breakout level. So this is the lower consolidation down here, smaller rectangle. Again, coming out of consolidation and 3 pushes, breakout peak 1, breakout peak 2, breakout peak 3, ending in 1, 2, 3. So a 3 peaks pattern at the high, 1, 2, and 3. And then maybe you don't feel comfortable with this, but it breaks down, makes that lower low, and then pulls back 1 bar, 2 bar, 3 bar, 1, 2, 3 to the high. Engulfment. This is a good entry here. If you don't feel good with that bar, this next bar comes down 1 tick below that bar. Any of those entries would have been fine, but this is a really good low-hanging fruit trend trade opportunity on a Tuesday. All right, so then Tuesday closes in breakout, opening range breakout. Is that breakout going to succeed, or is that breakout going to fail? So we can take this, always project this level across. Whenever you have to ask yourself that question, is this breakout going to succeed or is this breakout going to fail? Project that level across so you can see that. Now also, New York, this was the high of the day prior to the New York session. And how did they get back to that level? They came out of consolidation and a peak, and then a peak, and then a peak, and then at the high, push 1, push 2, push 3. I believe people are trapped above push 2 and ultimately above push 2. And then it breaks down. Now we have lower low, lower high. So I could have been in here, or I could have been in after they make the lower high over here, which you can see is very clean and very clear. 1 bar pause, 2 bars, 3, kind of a 3 push pattern. Actually, I think it's more like 1, 2, 3. Again, 3 pushes is kind of subjective. But then the peak formation that was made immediately after that, down, up, down, engulfment. Let's see what time this was. This was after the New York session has ended. So my time over here, okay, so 9:30 at the high of the day, perfect timing. Peak formation high has been made after the 3 push pattern in a down moving market. The breakout is succeeding, back down for the low of the day. Now, I already know this video is extremely long, and if you've made it this far, I want you to see the repetitive nature of these templates and how they form and how they evolve, and how once the template builds, how the day could evolve to where you don't have a trade anymore, or that trade turns into something else, and you need to be aware of that so you can evolve and adapt with it. Ladies and gentlemen, I hope you've enjoyed this video, and I hope to hear from you in the comments down below what your thoughts were, and I will see you in the next one. Bye-bye.